All right. So looking into last week, this is what we have. So we have Friday, Thursday, Wednesday, Tuesday, Monday. So this is how the week started. Um, if you look at this is how the previous week had ended. And I did call out a sell setup all the way up to the bottom there. And now we want to try and find out how that unfolded, why we got a sell setup instead of a buy. All right. So if you look at this, starting maybe if you want from the weekly time frame, the pair has been selling, which is fair enough. It's been doing a sell, and this is the candle that it was on. So what really, you know, struck me was that we were in an area where I would have expected the market to make a not just a reversal, but a reaction. So if you know a little bit of ICT, you can tell that you are in an order block area. If you know price action, you can tell you are in a is it a resistant area, um, and so forth. But for me, I treat these as necklines. Like I told you guys that all I do is I print the neckline and then I wait and see where I'm gonna see a W formation setup in that area. But this one did go past that. So I knew that if it had gone past that, surely it should come and react in this area. Reason being, we have reacted before here, and we also have reacted before right there. So you can actually see how price reacted here and there and did go through it here, but reacted there. It went through it, came back, reacted to it, and then went down. And then again, it came and reacted there. So I was expecting something similar. But again, then I'm not saying that you just need to look at that and say, oh, yep, that's the only thing that I'll use when I'm trading. Not really the case, but I was looking at what price was doing in that area. Same applies if you look at this area right here. All these M's or V's that you see here, they've got a similar shape, and that similar shape comes because prizes to make it had to make a reaction there, had to make a reaction there, a reaction there, a reaction there, and a reaction there. And then here it traded right straight into it and then came back and reacted to it and then stayed above. So in such areas, you also 100% know that if price were to come down here, you would expect something similar. Let's just say price decides to fly coming down, you would expect something similar in those areas too. So that was my expectation. But then again, this is not enough to give me a setup. So then I had to look closely again and say, okay, how about we look at the market structure and the market structure itself dropping down to the D1 time frame. All right. Dropping to the D1 time frame, this is what we have. And we won't really see much. The only thing that we can tell is that the market formed a high there and then went down to form a low right here. And then went up to form a lower high and then came down. And at this point, we did break this low, which is very significant. And we did break this low again, which is very significant. But when we broke that low, that is when things became even more significant. What do I mean by that, or what am I talking about? All I'm saying is if a market is going for an uptrend, right? Let's say the market is coming for an uptrend, it forms a high and then comes back down for a low and does that, right? You've got a market that has done that. So if the market has only done something like this, the buy or the uptrend is still not yet confirmed. What do I mean? For this law to be confirmed to be a law, it has to break this high, right? I'm sure you guys are listening to this. So for this law to be confirmed a law, for this law to be confirmed a law, it has to break a high, that high, the last printed high or the previous printed high. So it means it has to break through it. Then that's when we can say, yep, that law is a confirmed law. And gain and go and form, maybe say another high, and then come back, break that one, form another high, and then go up. It doesn't matter how long it pulls back and does that. As long as it's not broken, then it is not confirmed. But if it's broken, it is. So you look at this, you see that you've got your high broken there, and you've got your high broken there as well. So what this means is that the laws will only be confirmed if the high is broken, right? The laws will only be confirmed if the high is broken. So I'm gonna show you all right, so lastly, our high. So this right here is your higher, maybe let's term it higher low 1 and higher low 2 and higher low 3, and then term this one higher high 1 and higher high 2 and then higher high 3, and lastly higher high 4. Right. So the laws were only confirmed when the high was being broken. So if price were to then come down here and do that, and then do that, and do that, and do that, you see price like this. It means, one, the market is still an uptrend because it hasn't broken the high and neither has it broken the low. So the market is still in between this high and this low. So that's why it still becomes an uptrend. It will only be a downtrend if it takes out this low. I don't know if I'm making sense or I'm confusing other people here. Please confirm in the chat page if I'm making sense, and if I'm confusing you, please tell me so I can elaborate both sides also with the downtrend, right?
Well, Coach, I was gonna say, why that low and not the other lows that were made?
So that's a very good question. So what the market does is, right, we are coming down and we form a high. We form a high. Then after forming a high, we form an unconfirmed low. Now, after we've formed an unconfirmed low, the market is trading between the low that was formed before and that high until we break the high and form a new high. Then that's when this low becomes confirmed. So what it means is the market is now trading inside this low and that high. So whatever is formed in between is not yet confirmed until either of the two get broken. Does that make sense? So the low only gets confirmed when it breaks the high. And if it does break the high and trade away from it and then come back within the range, then we only consider that low and that new high that has been formed and say, yep, we are trading into the range. Now we're looking for more setups so we can buy, right? This will help you even when on counting levels for you to understand because our levels are also in steps, like we move from level one to level two to level three. So it will help you to know that, yep, we are not in an uptrend. We are not in a downtrend. We're still in an uptrend, right? So now after this low was confirmed and that high was made, it means you still haven't seen anything after this, right? Maybe let me try and make another illustration on the side. So what I mean is you made a high, you made a low, but the low is not yet confirmed because it hasn't broken the high. So it means what's valid now is the high and this low at the bottom. So this low will only be valid when it breaks the high. So after it has broken the high, then the market will not come below this low. The market will trade in between the new high and the new low. The only thing we expect the market to do is to continue forming new highs. If it breaks this low, then it means the market has changed direction. It's no longer an uptrend, it's now a downtrend. Does it make sense? That is why we are not talking about the other laws, because the moment we talk about them, it means if the market trades right into them, then the market has changed direction. I'll show you that on the charts. All right. All right.
Yeah.
So if the market trades right through them, then the market has changed direction. If it doesn't, then the market is still um, in that direction. So in this case right here up there on the higher high four, the only area we are trading in is higher high four and higher high three. So ideally, where the market is right now, where it is right now, we would expect it to continue making highs. If by any chance it decides to come back down and make a low lower than this one, then we have changed direction. We are now on sell setups. Now, this is how you identify valid loss. Now, if you are in an uptrend, you do not have to worry about highs. You technically do not need to worry about highs, but worry about lows because your lows are the ones that are going to be traded into. I will show you when we go into a downtrend, right? Now, so this being the case, and you are looking into this price to break the high, what happens if we form a peak formation? Let's say the market decides to form a peak formation in that point, and let's say this is your first leg and this is your second leg. So the second leg did not break the first leg. What does that mean? If the second leg did not break the first leg, let's say this is D1 or H4, right? We're dealing with higher time frame because market structure is good if you look at it from the H4 and D1 because 1 hour it will break the highs and break the lows. You will always be plotting highs and lows all the time. But it's good when you do it from the 4 hours so you can see that okay, the market has changed the direction for a long time. So if this is the case, then the last confirmed low in this case is higher low 3. That's the last confirmed low. So for us to be 100% sure that the market has changed direction, what needs to happen is the market has to trade right into higher low 3. If the market trades into higher, if it breaks higher low 3, then we now know 100% we are in a downtrend. What we expect is to see the market trades right into, in between that low and that high. It means this high is a confirmed high because it broke the last confirmed low. So this new high I'm seeing here will only be confirmed if it breaks the low. So if it does break that new low, then this high is confirmed. But if it does not, then it means we are still in a sell, but there is a high chance we will go for a buy. But if it does break it like this, then we now know, yep, it's a confirmed high. All right. Please, you need to watch this twice so that it doesn't confuse you. So, yep, low was broken here, low was broken there, and low is broken there. So what does it say? It says this high is confirmed, and this high is confirmed too, and even this high is confirmed too, because they all broke lows when they were going down. The lows that they were forming, they broke them. So now, because you're on a downtrend, you are concerned about highs because that's where you want to buy. That's where you want to sell. So you're concerned about highs more than you are about lows. But if in any case the market then forms something like that and does not break the low, then you know that, yep, there is a high chance the market will be a buy. But that will only happen if the market takes out the last confirmed high. If it takes out the last confirmed high, then 100% we're on a buy. But if it doesn't take it out, then we're still on a sell. We do not look for any buys. Now, this is a case where the market did not take out the last higher high. But we've got peak formations where the market instead took out the high or the last higher high, thereby forming a new higher high. So the market took out the last higher high, thereby forming a new higher high. Now, in that case, what it means is because we now have second leg right here, which is higher or has got a higher wick than the first leg. So our last confirmed low is which one? Which one is our last confirmed low? Someone please tell me.
It's still a low here.
Exactly. That is our last confirmed low because that's the low which was responsible for breaking higher high 4. All right. That's the low responsible for breaking higher high 4. That's why I always say it is so much easier to trade cycles or setups that have got higher second leg because those ones will have a confirmed lower low closer to them it's so much easier to trade right through them. You'll see examples as we move on. So it's easier to trade through them because they are closer to the peak. Whereas the ones with unconfirmed necklines or lows, it's difficult because the price has to move a considerable amount of move before we can then say, yep, that is indeed now a sell move, something like that. All right. Now, I guess you have understood this part. If you want me to repeat it, I can repeat it as many times. I do not mind. All right. So now let's look at the chart examples, even though we're still talking about this USD CHF. So this USD CHF, we are marking the market structure here, and this high is confirmed because it broke the low, right? Now, the last confirmed low here is this one. That is the last confirmed low. It's the last confirmed low because this is the result move that broke this high. All right. So that's the last confirmed low. You can tell that other lows here did not take out that new higher high. So they are not confirmed. So the moment price traded right into that low, the moment price traded right into that low, that's when we knew that price is now a downtrend. So all we are waiting for was, so this can be an indication to tell you that, yep, market has changed direction. So now price then went back up, but by going up, we already know this is a downtrend. So we now look for setups, wherever it is, because this is a D1 time frame. We now look for setups on the peak and whatnot and all that. But knowing in the back of our minds that we are now in a downtrend. All right. So even if you were to mark this area right here and go, that's H4. And go H1, you have a, oh, that's not a nice peak formation. That's just a peak formation, but not nice. But you can tell the market started buying here, going towards the last high. And at the back of your mind, this is your last higher high. And this is the move that broke the last confirmed low. Last confirmed low is this one because it was responsible for taking out the last confirmed high. All right. It's even clearer on H1 because now you've got so much activity. So that's the last confirmed high, last confirmed low, and it traded right into it and beyond it. And then it came back and traded beyond that confirmed low to confirm for us that we are now in a downtrend. And then it came back up. So as it was going up, all you had to do was just count 3 levels, and you knew that, yep, when price gets to the previous peak formation, it will definitely react when it gets there. You knew that. You knew it was going to react. So all you had to do was then take your sell positions, or maybe if you missed that, you could have taken this for some reason, and then say, yep, now it's time for us to go. And you know that since we have broken that low, you are happy to see us, since you've broken the confirmed low, you're happy to see us trade right through it and continue to break as many lows as we can. All right. Now, I don't want to waste your time, but I'm pretty sure you guys understand what I'm talking about. So if you go to the 4-hour, this is where we got our setup on the 4-hour. So from the 4-hour, you do have a confirmed high. You do have, the reason the high is confirmed is because it broke this low, right? Now, a new high was formed here. and this high was responsible for breaking this low. All right. Now, what happens then? After this low was broken, remember our neckline trade, that is exactly where we were waiting. All right. Neckline trade right there. So we wanted to see the market react in that neckline area and push down. And I even gave a TP equal to the low. Oh, sorry. The TP equal to the low, right? So all you had to do was just put a sell right there as soon as the market opens. Well, if you are strong enough, okay, and then just have the market um move your direction, you're triggered there, and that's it. Right. And that's it. Now, notice something here. The market does not trade right through that low. So what does it mean? It means this high, this new high that we have is not confirmed. That's what it means. It is what? It is not confirmed because it did not break through the low. The only way we can say this is now a buy is if we break that high. But this doesn't mean don't trade it, just relax and ignore everything. No, it doesn't mean that. Remember, we have levels to count. We have so many things to look at, right? But I'm just showing you the market structure. Like if you take a buy and then you see the market is over there, like the one someone who took boom 500 during the weekend, they were asking whether it was continued to go low or sells. I look at the market structure and I said, yep, we've been breaking confirmed lows, so why can't we move even further down? All right. So that's what you're looking at. So if someone were to ask you now and say, is USDCHF a buy or a sell? USDCHF is still a sell. Why? Because we haven't taken out the confirmed high, and we're still trading within that high and that low. So it is still a sell. However, I did not say just get into a sell and start selling, right? I didn't say that. Now look at what happens. You've got what looks more like um, trading into that low. Personally, I do not like things like this. I want something that is clear. So I do not like things like this. So I do not consider this as a a confirmed high because of that little, is it even 1 pip or less than that? I don't like that, but I can still consider it and leave it as is. So for me, still, we're still trading between the high and that low. But I would have been happy if we had gone further in for us to show that, yep, we are continuing with that. Of course, if you count levels for this pair, we'll see when we now do an analysis that where we'll see where the market is actually going. But here I'm just trying to bring across the point about market structure, how market structure can actually help you with these setups. All right. Now, we had another setup, which was GPP card. I didn't like this one for only one reason, that I got stopped out at entry right there because I had to sell. So we had entered a sell here, and we did go down with the sell. News came and we went even further down. That was good, but this is not where I expected the market to go. I wanted it to go further down there, which is where it's going now. But unfortunately, they reversed back and went back up. But I understood the reason why they went back up. I understood why we had to do this move. If you look at it from the 4-hour time frame, right? If you look at it from the 4-hour time frame, we have a confirmed low because it broke that high. We have a confirmed low because it broke that high. Another confirmed low, right? Because it broke that high. And we have the high right there. And after that, we do not have a confirmed low. So it means this neckline is not really a confirmed low, but that doesn't mean that it doesn't work. No, 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 no. Get this right. This is just market structure, right? So the moment price traded right into these two lows, the market traded right into these two lows, that's when I knew that, yep, what we're gonna do here is we will trade right back into the range. And my kind of setup, if you want, you can use this order block. If you want, you can use the neckline, still the same thing. I don't know if there's any fair value gap here. I don't think so, but you can use either of these and aim for a setup. Well, I was waiting for this sell setup. The only reason why I failed to take it is because it happened late at night, and this right here, right? So I got into my entry because we closed the day as a buy right there. The following day we started as a buy. And remember, during these hours, I'll be awake because that's day for me. So I took the sell, moved into profit, put a stop loss in entry, and then boom, they took me out again, same pair. And that was at night, and I was sleeping. So they took me out, and then they went all the way down like this. And when I saw it in the morning, I almost killed myself. I was like, oh yeah, this thing. So that is exactly what it did. And now I then start to count my levels. Going from there, I start to count my levels and say, yep, I have level 1, and this to me is not level 2, it's the consolidation. So I need to see my level 2, right? And then I need to see my level 3. So I can actually use those lows as well as areas to anticipate where the market will turn around. So I want to see my level 3, and I would love to maybe see a reset and a continuation if possible. I would love to see that. But yes, that's what I saw on GBP card. And something similar again with GBP USD. Now I'm just mixing with the what do you call this? With the analysis. Something similar again with GBP USD, but interesting with GBP USD. All right. What I love about this one, the wicks are more or less clear, like anyone can see them right there. Anyone can see the wicks. What it does mean is that it makes this a confirmed low. It makes that a confirmed low. And the fact that prices traded into it and broke it, it makes me want to love this pair, because I would expect the market to come back into that area, form the high of the week, and then go down. I would love to see the market do that. That's going to be an interesting one. Looking forward to it. And again, the market might even bring a wick over here in this fair value gap here. Remember what I said about the fair value gap? You look at 3 candles. So one candle, this candle right here, and that candle right there. They did not clear each other's space, so they're not touching. That's why you call it a gap. right? Even this one right here, let me mark it for you right there and right there is a gap. Let me show you. Oh no, I hate this pen. All right. So let me clear everything so you can actually see. So this here and there, between this candle and this candle, right? They have formed a fair value gap, but it has been cleared out by this guy. It has been cleared out by this guy. So that's what you would expect the market to do when it gets into a fair value gap. You've got another one here as well, right there. But it has been cleared by who? By this guy when he was going down, right? He has cleared it. But this one hasn't been cleared. So you would expect maybe the market to come to the neckline, all right? Because you have reacted there before, and you obviously have reacted here before because that's the same area. So you'd expect your market to trade right back into that area. And then you wait for an M formation setup in there, and then you trade away from it. That will happen, guys. It will happen. I'm 97% sure it will happen. If for some reason the market wants to grab a little bit of some money, it will definitely come as far as that. But that shouldn't really scare you because it's just clearing the board and then all of a sudden continue with the setup, which is the same thing that I was showing you on GPP card. All right. Same thing I was showing you on GPP card. What took me out. All right. So you can see how the market did that and then turned around. But if you look at it from the 1 hour time frame now, this is where it gets a little bit interesting. So we have broken a confirmed low. I was hoping someone will ask this question. So we've broken a confirmed low, right? We've broken another confirmed low as a result of the move to the downside. Now, someone might say, oh, yeah, but sometimes the market does form some things that look like a reset. 100%. I agree with you. Look at this, guys. You might even be tempted because, for example, you're looking for a sell here, right? And you see the market is doing that, the market is doing that, and does that, and does that. So surely when you're looking at this, you're saying to yourself, yep, the market has formed a reset and it's time for us to buy, right? But you are not seeing the traces that the market is leaving, which is taking unconfirmed, taking confirmed loss. So in that case, the market, for it to be a buy, it will have to break that high over there. So in this case, what's more favorable for me is to look for a sell, not a buy. That's the reason why I looked for a sell in the first place. Yes, I can see that it looks like a reset, but I'm not taking it, right? Because for me, what's favorable is to look for a what? For a sell, not a buy. So that is exactly where you also get hit because you're just looking at that and you're like, yep, that looks like a reset. And then you forget the footprints that the market is actually leaving. Let me show you a difference of that. Let me show you the difference of that so you can understand what I'm talking about. Right. Look at this guy right here. you look at this guy. The last confirmed low is this one, right? Last confirmed low. And after that, the market, I don't know whether here they're trying to form a second leg or whatever, but it is what it is. And they decided to come all the way down. And you also use your judgment as well. And I'm not saying this is still a buy, but you can tell how they kind of reacted when they got to that point right there. They kind of reacted. Yes, they did throw wicks, which will show you that there is a break of that confirmed low, which is fair enough. But then I did send this setup, by the way, saying the market will come back into the range. And it did come back into the range. But for 4 days, I did not see any reaction, whether we were going to sell or we were going to continue with a buy. Like it didn't do anything. And that is one of the things that was kind of annoying me because I said, even the peak formation doesn't really look like a peak formation to me. Like there's a huge gap here, huge gap. It doesn't even look like it's an M. Here it did kind of come and react there. So I said, nah, this is not my kind of trade. And I didn't even bother looking at it. But that reaction there, like a very nice reaction on that low, made me wonder why couldn't we just tread into it, like to show that we have gone into it. Um, and then we just went back and we've stayed there. So that means we are now trading in between this guy and that guy. That's what we're simply doing. We're trading in there. So it is still a buy when you look at it from that way, right? However, it does not mean that it will not sell. It does not mean it won't sell. But that is one good example that made me say, nah, I don't fancy this kind of a setup. Then we've got this one. I kind of love this one, and I'm hoping it does work out the way I would expect it to work out. So this one, what this guy did was he broke the confirmed low, took it out, closed below it, and then started trading upwards. Again, you would have waited for the neckline trade, and they would have thrown in something that looks like a setup, and then all of a sudden trade below, even on the fair value gap. Sometimes that happens, guys. You will never win all the trades, right? And then it came in there, traded into that fair value gap, reacted to it, and then traded past it, right? Now, someone might say, oh, maybe what if this is now a buy? So there is our high, and that is what we have done to our high. We haven't really done the exact same thing. What we have done on our high is not the exact same thing we have done on the confirmed low. All right. That's not what we've done. So I look for setups that I've seen that, yep, market has traded into that low. You can actually tell with the presence of candles there, but you can see what we've done to the low and what we've done to the high, miles different, right? Now, for me, this remains a sell because we have broken that low. We were never supposed to close below that low. And by it going back to the high, I kind of fancy this setup, and I would love to take it next week, because what it means is if you go to the 1 hour time frame, you have a peak formation high, and then you have a low, which turns out to be a reset in between, and the peak formation high. And you can actually mark your rises here. That's one of the things that I loved about this trade. You can actually mark the rises and say, yep, rise 1, rise 2, rise 3. You can actually mark it. So which is what makes me think if we would throw these 3 pushes to the upside, going towards the peak line area there, you can see even on 1 hour, we never close candles beyond that, which is even strange. So I expect this market to start giving me um lower lows and lower highs. I would expect this market to start pushing down, and by making this kind of uh peak formation, if this peak formation does play out like this, because I'm willing to enter this as soon as the market opens, and if we do push all the way down like that, I would really love for us to go as low as maybe that low right there, that high, sorry, to go as low as that high. And looking at it from the higher time frames, all we'll be simply doing is coming back to the neckline of the W, react to the neckline of the W, form a reset instead, and then um, move up. That is what I'm looking forward to on this setup right here. So I'm just mixing analysis and so forth. Now, is there any other pair anyone wants to look at? I can give them a floor to speak. Any pair anyone wants to look at? All right, while you're still thinking, I would like you to pay attention to USD MXN next week as well. That's another good um, setup. So you look at this and then say, right, find the simplest things, the simplest setups. That's what you're looking for. You don't want anything that's uh will give you a headache. All right. So you've got one. Maybe before I explain this one, I'll show you this one because I want you to understand. Right. This market closed with a reset there, right? If you were trading USD ZAR, that's where it closed. All you had to do was just enter a sell and then trade straight into the low. That was last week, right? And trade straight into there. That's all you had to do. So these are the kind of setups that I say you need to look at because they are the simplest setups you can ever trade. So we've got a 1 there, we've got a 2 there, and then we've got level 3 there. So that's peak formation low, and that's a reset. See how clear and clean this is, right? Reset, and then here it actually threw 4 levels, if I remember correctly. That's a very good example of the market giving you 4 levels sometimes, not all the time, right? 2, 3, 4. So you could have exited here, but then it gave you a 4th level and came down. Now, after coming down, this is what the market has done, right? It has pushed up, and I need you to take a look at this. So it has pushed up, but it has done 2 levels, 4-hour. So in terms of 4-hour, it has done 2 levels. Right? So it means we're waiting for a 3rd level. Now, what are we doing in the 800 EMA? That's a clear indication that the 4-hour wants to do what? Wants to do a reset, right? That's 4 levels, not 3. Let me show you. So the reason why I'm saying it's 4 levels is because we did break the neckline and closed below it. So we closed the market here. They are short. These levels are short, but we closed here and the lowest of our necklines is right there. So that's why I counted this move as a level. But if you can bundle up everything and say this is your level 1. It's still the same thing, right? But I did look at the neckline and I said, okay, the neckline is a little low, is a little higher than where the market closed on that entire day. So that becomes one, that becomes two, and then you have three, and then you have four. That's the reason why I said four levels. All right. So now what we are looking for, I guess you can all see, right? I'll remove all these level boxes. I'll remove the level boxes. Now watch this. You are in a neckline, right? You are in a neckline. A neckline that was caused by this reset being a confirmed high. Imagine. Now you can use this, you can use your market structure to actually tell whether a reset is going to be confirmed or not, right? So that becomes your confirmed reset. That's why we say a confirmed reset is supposed to break the previous peak. So that's what we will be talking about, right? Still the same thing. So that there is your high, and this is the last known low. And what the market does is it trades right through into it and now presented us with a neckline trade. So we want to see something happening there. And again, the market reacted on there, right? Look at that. Look at that. So this is a very strong area where we would expect the market to actually react. All right. The market has been reacting in that area for a long time. You can actually see the behavior of the market when it got into that area. You can see it. I'm moving towards days and days and days. You can see there, even when it went through it, but it first started by reacting there. It went through it, started by reacting there, reacted, reacted. So that is where price is, and that is where it normally reacts to it, right? And this is the 4 hour, guys. Here is your D1. So you already know that, yep, you are actually on a sell. So what do you expect here? You expect the market to go down, right? You expect the market to give you a setup in that area and then do what? And then go down. That's what you want to see right there. And I know we've got a video on YouTube where we counted was it 3 weekly levels or 3 daily levels? I can't remember if it was daily or weekly levels, but I think it was daily levels, forming a weekly level on this pair some time ago. We did a video about that and we said, yep, this was a peak formation, and we counted one level, I think, weekly, and then we counted the daily levels. And now we are at a point where we have formed a peak formation up high there. And we are now looking towards a sell. Now, looking at our market structure, which is one of the most important things, the last confirmed low in this case from the D1 is this guy. That's the last confirmed low because it took out that high, right? It took out that high. So that's our last confirmed low. And we have broken that low. So that even gives you strong indications that the market is trading back into there and it will sell. Now, again, I have drawn this bar to show you where the market reacted and all that. If you don't want to use that, it's still fine. You can still rely on the neckline trade, right? You can rely on the neckline trade. If you still don't want to use the neckline trade, you can rely on that resistance that happened there, which you can call an order block, right? So you can rely on that order block that happened there and say, yep, but this is too big. So that's why I didn't want to consider it because it's too big. But you can rely on that. And remember, this is the previous peak reset that I showed you, where you see this green candle and you call it an order block. That's just a peak reset that we saw on H1 right there. That's the peak reset. So you want to see the market react around that area, which is also the neckline area, and then start to sell. So what are you looking for when you get into the market on a Monday on a Monday morning? Right. I get here and this is what I do. So I have this peak formation, right? I've got my first push to the upside, okay? But remember, the market turns right back the same day. So my push is this entire thing, all right? And my second push is this one. So I would be very happy if for some reason we trade a little above there. I'll be very happy. I don't care how far the market will decide to go, but I'll be very happy to see us buy in the first hours higher than that, or even open with the market gap up there. That will be a blessing if we do that. If we open with a market gap, that'll be a very big blessing, right? But I'm looking forward to the market trading right into that area there before it gives us a sell setup. And again, in the same area, I'm not just looking into jumping into the trade. I'm looking for an M formation. It can be in the 15 minutes, it can be in the 1 hour, but I'm looking for an M formation because remember, even smaller time frames have what do you call this? Have market structure, right? Smaller time frames also have market structure. And it would be good for me to also show you this on smaller time frames, right? So we've got our low here. The only time this low gets confirmed is because it broke the high, and then it broke the high, went up, came back down right here. So this is not even part of our low, but this is. Why? Because it broke the high on its way up. All right. So it means the next low that we look at is this guy right here, and we would love to see it break the high going up. So if I'm saying you look for a setup, maybe on the 15 minutes time frame, you look at it and go like, okay, so that's our low. This is what we've been doing. And on the 15 minutes time frame, we have a confirmed low there. Why am I saying this is a confirmed low? It's because it broke these highs while going up, right? And formed a new high there, right? So anything happening in between this low and this high is just rubbish, right? It doesn't matter whatever it does. All we want to see is this guy break out of there and do that, and then go up and then form a sell. That's the only way we can then say, yep, now this is a confirmed high there because we've broken the confirmed low. I've said this word so many times, and I'm hoping I'm not confusing you guys, right? So what are we looking for? We're looking for this. That's what we're looking for, right? So I didn't say it's gonna be exactly like this, but that is what you would expect. If for some reason the market decides, nope, we'll go down that way, then it means when it comes back, you still look for sell setups. If it does do that, break that low and go up, then you're looking into a sell. This will help you because you have situations where okay, maybe this is a good situation anyway. You have this situation where D1 is selling, but at the current moment is reversing, right? And because of that, it means 4 hour is buying, or 1 hour is buying at that particular moment until they also break the laws. They will remain buys until they break the laws so they can align with the D1 time frame. That's what you're looking at, which is the time frame blending. So you've got the D1 with a nice M and something like that, and then H4 with 2 levels to the downside, and then you've got that. So until we break this law, we break this law or that high, we remain a sell, though now we are currently in a buy. So which means I won't draw the entire thing, which means H1 is actually like this, right? So we want to see us align with higher time frames for us to then have this sell. So market structure has to align with higher time frames. So something has to happen on the 1 hour, which is breaking a confirmed low, right? And if that does happen, then it means, yep, we are now aligned with higher time frames and we are in a downtrend. You can actually tell from here, from the look of things there, that in as much as the market formed this high, whatever they called a high there, right? This high is not confirmed because it never broke this low, right? Like I said, market structure only helps you to know what to expect or how much to expect out of a pair. So it's not a confirmed high because it never broke this low at any point in time. So it means we're still trading on this low and that reset high. That's where we still are. So that is not a high because it's not confirmed. That's what it simply means. So there's nothing you can do on that high at this particular moment, right? So you can just observe. But then the market will break the confirmed low, which is this one, I believe. Yep, this one. And trade right into it. So the moment we close below this candle, then we know we are in a sell. All right. I hope someone has thought of a pair that they want us to discuss. So what pair is it? All right. So someone is saying let's do volatilities.
Gold.
All right, let's go to volatilities first. Let's go to volatilities first, all right? Okay. All right. So which volatility pair do you want us to do? Can you all see my screen?
Sorry, coach.
Mm-hmm.
Good evening. I celebrate you, boss of all bosses.
Yes.
I want us to discuss something which I think it will help everybody, and you open my eyes to it about the turning of the TDI. Please, can you open the TDI, sir? So that
All right.
it will back up this thing that you just taught us. It just sprung up in my mind. When the turning of the TDI, maybe you should make it half, sir.
Okay.
So can we go to 1 hour on this particular pair to see when he wanted to turn?
All right.
Okay. Now looking at that top now, where this market was coming, I remember you taught me this thing that we should focus on our attention on when MBL and the price line is turning. And this thing really helped me a lot, which I think if we share with the community, it will help them while they are looking their higher high and higher low that they are expecting it to come back. Then it break this to still know. Then let us look at this place now. With this market, when it wanted to turn, it gave us this leg, which is this leg. Then it dropped. Then they came back to test it. That is when the turning was very sharp. At this place, we will know. Even though if the person didn't understand what you explained, but with this, he could understand that for this thing to make a good turning here, I think we are in a proper sell direction. It also always happens when some market want to turn up. I think this, if you can explain to complement that higher high and it will really help us. So I'm just bringing as a suggestion. Thank you, sir.
All right. Thank you for that. Just a second. I wanna so we said V25 is, I'm trying to write down this pairs here. Crush 1K. All right. And EU. Okay, so we'll do these three. Oh, someone said gold is so 4. All right, we'll do this 4, and then we'll take it from there. Okay. So, sorry if I didn't hear you, but you were talking about the, oh, I will need my pen now.
Yeah, I'm talking about the when we want to blend the TDI with our direction. That's what I'm talking. So that when the price is going up, many people always look at it that how would they pick the second leg? And if they are not sure of the second leg, there is a way that you now open my eyes that, okay, I should always allow TDI, that TDI always give us a perfect movement for that, for us to know. Like this market that is going up here right now, and you can see that it's keep on going on, the TDI fixed up perfectly here.
Yes,
But
yes, yes, yes.
when it got to this level, the price of, but the TDI has not make a good U-turn. So where will they get him? We can get him here, which is the last low that he make to create that up. Then it came down to break. So this TDI, the price line has already formed in alignment with TDI, which means that this place, which is this place here, we can make a good this thing, which is a sure winning. Out of 100%, at least 98% always work, which I have tested and
all right.
thank you so much.
I
That's
get,
just I'm just bringing that suggestion, my
yeah,
boss.
I get where you are coming from, because what we have is we've got these highs here, right? And you can
Yes.
tell with the divergence there. Now, this is the divergence, but the MBL is still,
Has not turned.
there's not turned, yeah. So now
Yes.
the MBL then turns and goes towards the midline, which is the 50, right? Goes towards the
Yes.
50. So now, whilst you have your low being taken out here, right there, your low being taken out right there, this move is this move right here. It's the move that will make this MBL to bend and face downwards for
Yes.
us to say, yep, now we are turning the direction. And as soon as that happens, then when it treads back into it, we know this is our area where we would
Entry.
expect to set up. And the same area is the neckline trade. It is the neckline trade. So you take yourself from there and go with it. You know, something about the market, right? There is so many opportunities, too many of them in the market, such that it's hard to keep up. Like some of them, you get into the chart, you see they've already gone. Some of them, they're still there and so forth. It's hard to keep up with the market because it always forms setup all the time. So the best way you can do this, right? Let me see. Can I answer this now or not? All right. Maybe this will be one of the last things that I'll I'll talk about. All right. So I don't want us to deviate. So let's look at the pairs we wanted to look at, and then we'll come back to what I wanted to say. What is this now? All
Coach, I'm
right.
very sorry for bringing you back. I'm very sorry.
No,
Sorry.
it's all right. It's all good. It's all good. It's very valuable what you were talking about. Let's look at V25S. So we're gonna look at V25S crash 1000 EU gold, and then I'll talk about what I wanted to talk about. So I'll be quick, but hopefully you guys will get what I want to talk about. Right. One thing I love about V25S is because we once discussed it at some point. We did discuss it at some point, and someone brought it in the group when they wanted to sell it. Let me use 4 hour instead. So someone among you guys was selling right here. And they brought it among the group and said, oh, this pair is actually buying. And we analyzed it. And I even sent a detailed analysis. And I said, the only thing they can do is come to the high or the 200 EMA, and they will definitely sell. And that's exactly what they did. All right. So we've done this one, so I'm not gonna repeat it, but if you really wanna see it, it's there on the charts. I actually sent charts all the way from the monthly time frame. And I said our target area for this sell is here, right? Our target area is here on this order block there. If you want to be specific, then you can say on this low right here, on the low of that candle. That's our target area. And we even did talk about how CRT model was formed right here. And that is also one of the things that made us say, yep, we are pushing downwards. Though we do not have so much information on the left-hand side, but because that's all that we have on the monthly time frame, but we knew this is what was going to happen. And we did talk about the weekly time frame, and we said probably maybe our target will be somewhere there, which is exactly the same area that we were seeing on the monthly time frame. So that's where we expect the market to actually go, and we wanted to trade on all of these fair value gaps that you see here, all of them. We wanted to trade through them, all of these, and while it's going down. So we want to see it go all the way down. So we did discuss this one, guys. So I would love to see us continue go down. There is your neckline trade from the D1, as we had said. Neckline trade right there. Very nice. And where you can see a cord of wood there, this shows you there's an M formation there because the green is up, down, up, down. So that shows you if I am to go to lower time frames, there is an M formation there. Look at that. Beautiful M formation in that spot right there. And this is exactly where I have marked. And now you probably wanna then find out your levels, try to count your levels and see how many levels you have so that you may know why the market came to the 800 EMA in the first place. Did we complete 3 levels or 4 hour, or did we just have 2 levels, etc.? But that is what you could have been waiting for when you saw the market buying all the way to that zone. And also again, yes, it was buying to also cover up the fair value gap that was left here and was traded into by these candles, but not all of it. So it was also covering that as well. So you can also use that as another excuse to enter. So that's it, guys, about this one. But yeah, if you really want a detailed analysis, is there in our group, all right? So let's go to crash 1000. Crash 1000. So crash 1000. All right. So weekly time frame is a sell. I take it monthly is a sell as well, which is okay. Daily. What are we doing in daily? From the daily, again, it is a sell. Why is it a sell? This is a law that was taken out by this confirmed high. So that confirmed high took out this low. So what we are simply doing, we are trading back into the range and then continue going down. So where do we expect our setup? So confirmed high. I would expect my setup on this order block. Why? Because this order block is also in the same area with, oh no, is also in the same area with my neckline, right? With my neckline right there. So neckline, order block. Let me try and zoom it. Yeah, that's how far I can go. But neckline right there, right? And then order block right here. So this is the area I would love to see the market come to. I love how the high of the neckline and the order block are the same, you know, but this is where I'll be looking to see the market come to. Again, if you want, you can put a Fibonacci all through up to there, and you can tell how you are, how those things are above the 50%. These are just psychological levels, right? So yes, that confirms this is where we're gonna turn. So keep in mind, that's what this pair will do. At least that's what I expect it will do, right? Now let's go to the lower time frames and confirm whether we have room to go there. So I will just mark this so we can see where we are going. So 4 hour, this is where we are going. And I don't know if the TDI is showing a proper one here, but I think it is. I think it is. It's not that bad, and even the Bollinger Bands are opening up, which is good. So for me, what you then have to do now is to count your levels from here all the way down up to there, just to confirm they are enough. But from the look of things, these 3 hits to the low does show that that we've got enough levels. If we go to the 1 hour time frame, if we go to the 1 hour time frame, and we can say probably that's our let me see, that's our first level, because this one, can you guys actually see? Let me zoom out. So this one is our first drop. Now, the second day, it went down and went back up. So that's as good as it never moved, because the opening and closing price are nearly the same thing. So our second leg, sorry, second leg, our second leg was this one. Now, and then after that, the same thing happened on the third day, which is kind of confusing, but I'm thinking what the dealer was doing in these first few days was throwing just 3 pushes to the downside. That's the problem with volatilities, because they just push, go back, push, go back, push, go back. So you can tell how they just threw a new low, then go back up, then come back all the way down and reverse it at night, went all the way down, reverse it at night, and then they form what looks like a reset. Because if you count your levels starting from here, you can tell that you have 3 levels from here. You can tell that you have 3 levels, which makes, oh, let me move this one away. You can tell that you have 3 levels when you're going down there, which means this is a reset, very ugly one, and that confirms this is a peak formation. But what he did here, he was just throwing pushes only. That's what he was doing. So he only did a push, and then lastly, he did the last push right there. So he was just making pushes to the downside and then reversed and went for a reset on the same day, and he started pushing further down. All right. He started pushing further down. So if I say we'll buy all the way up to there, that would be still okay. There's nothing that's stopping us from buying all the way up to there. But again, this box is very big. So the area that you would expect your market to play around is probably, let's look at the neckline on the 4-hour. It's probably around here on the neckline on the 4-hour, right there. That's probably where you would want to see the market play around. And because now this shows us a clear neckline as well on right there. Yeah. So that's where you would want to see your market go to. But then again, this is still a sell, so it will do that and then crash. That's what I would love to see this market do. So let's see what will happen. But that's my analysis on this one. All right. What else? I hope you people are still here and not sleeping. We've got EU. Oh, sorry about that. Got EU, Euro USD. Euro USD. Right. What do you guys think about Euro USD? I'll try and remove the Asian boxes. It's too light now. But it's okay. Or you guys want the Asian boxes, maybe. So who wants to do the EU? Or who asked for EU? Let's see who asked for EU. They said is sorry, my mic is not functioning well. So okay, who wants to do EU? I love this one too, because I looked at it yesterday. Anyone who wants to do EU? Or you want me to keep talking?
You can put it to 4 hours, sir.
Okay. This is your 4-hour.
So, okay. Looking at these 4 hours, I think the market gave us a multi-day peak formation, which he first of all gave us this one, which I can remember you told us that anytime you give us a second leg that is not equal, we should always put our level here so that it come there to test it, which it did here. So from this, I might count this one to be my level one like this. But because he came back into it, so I'm still counting it to be that. So this is level 2 here. So I'm expecting level 3. Either they will either come here before they will now rise, or they will just rise from here next week to go to the top. So can we go to 1 hour? So on 1 hour, I can see clearly here that the market gave us a drop here. which he removed this, he came back to test, gave us this, then so maybe it will drop it here tomorrow to complete level 3, which it will now give us a big formation to give us the final move to the top. So that's exactly what I'm expecting on the Euro USD. Thank you, sir.
So
Can you hear me, sir?
yep, I can hear you. So thank you very much. The reason why I said I like this one again, all right, so it's good to use the template. I love it because I also want to count my ATR and all that. But then we'll go back to trading view because it's a lot clearer there. So now looking at this, we've got 291 ATR. So if you measure it here, 291, that make you sit on the 800 EMA. And remember, that's where you said you want to see them sell to. So that means there's a high probability they might get to that level, right? Now, this being our level 1 and this entire move being our level 2, because on Friday they didn't really do anything. So we would expect that they give us level 3 right there. Then we can form a peak formation low. Right. So that's what we expect. Okay. So it's good to use these tools, guys. 291 pips, it can tell you how far the market will go. So it's good to use it to gauge how far the market will actually move. Now, this setup, the reason why I love it, they formed a peak formation here, and then they came down here and formed a peak formation low or reset on the 50. It's the same with the one that I showed you earlier on, where it pushed up 3 levels. All right. It pushed up 3 levels and stopped there. So that was Monday, second level, Tuesday, third level, formed the high of the week and then sold away. This is what we mean when we talk about market midweek reversal. When we talk about midweek reversal, we are referring to the market on Monday going up, Tuesday, is it? Oh, this is Friday. Sorry, Friday, Monday, Tuesday form the first leg, second leg Wednesday, sell on Wednesday, sell on Thursday, and then a short sale on Friday. Or Friday, sometimes they can buy and stop there, then they can sell on Monday. But that's what you mean by midweek reversal, right? Same thing happened on this one right here. So Friday, that's when you hit your last sell. And then Monday, consolidation, first leg. Tuesday, second leg, goes up to Wednesday, first leg, second leg, and then sold Thursday, and Friday ended with a buy. But that's what you mean by midweek reversal. All right, midweek. This is a perfect example of midweek reversal. But then again, it does not mean that this will always be the case all the time, because looking at this here, there's no midweek reversal, but here there is. All right, so midweek reversal, Monday, form the high of the week, consolidate, Tuesday, go back for the second leg, Wednesday, third leg, and then Thursday we sell, and Friday we sell. So midweek reversal. This one here, we did not have a midweek reversal, but this was Monday and we started going down, and then we had a midweek reversal on Thursday, and then we ended the week like that on Friday. So That's what you'll be looking at. But then this midweek reversal, it doesn't mean that every Wednesday and Thursday something like that should happen. Nope. It should happen in line with the direction of the market. That's what you're looking at, in line with the direction of the market. So hence, let me show you something. Let's go to TradingView and look at Euro USD. If you had looked at this pair from before anything happened, right? So bar replay. All right, so let's cut this one here. Let me see, what did someone say? We have already done V25S. We have already done V25S. All right, so this is what we had, and you probably were expecting a buy. Sorry, a buy, continuous buy, and then the market started by going up. So you actually see the momentum of the market as it goes up. So this is what happens. You've got the second push, and then you've got the third push. So because I am buying this pair, right? And then I see something like this. I'm buying this pair, but I counted my levels initially, and I saw that this was my first leg, this was my second leg, right? And then for some reason, this then happens. And I'm counting my levels. Now, if I see the market where it is now, right? If I see the market where it is now, I will not panic because that's where I expect them to turn around. Remember, on EU, I said to you ages ago that we have a peak reset that was formed here. I remember we analyzed this. I said we had a peak reset that formed here, right? And I said to you, what EU will do is it will clear the high of that peak reset and then start selling. I remember saying that. I said EU will clear the high and start selling. And you can tell for 2 days, 2.5 days, it was selling. Then it came for a buy again one last time. So it gave you another opportunity for you to take it. I don't trade EU. It's just too volatile for me, so I ignore it. But you could have taken another sell again on EU when it came back for you, right? So on D1 for our W1, you know you are in a key area where you expect the market to react and reverse. And then you see something like this. Do not panic because you can clearly see that you have a W, you have gone 1, you've gone 2, and you've gone 3. So what do you expect? If it's me, I'm expecting to see us form lower highs. So what do I do, right? I'm here looking at the market, how it was breaking the highs, which in this case confirming the what? Confirming the lows. So now this is the last confirmed low. Let me remove these ones because these ones are from the higher time frame. All right, this is my last confirmed low. And then market does that. Look at that. Trades through the confirmed low. So what does that tell me? That's an indication we are selling. Coming back to H1, this is how it now looks like. So you were holding your buy, or you were thinking what the hell is happening here? Was expecting a sell, but the market is doing whatever it's doing. But you know you're at a key level. You've got so many confirmations, right? So you do not panic. So what are you waiting for now? You want to see that second leg. All right? You want to see that second leg. Now look at that. The M is not clear. That's the reason why I did not take the trade, because the M is not clear, right? M is not clear, but here they are coming for an ID 50. Maybe that's where I will what? I will take a trade from. All right? Maybe that's what I'll do. But then again, me being me, I'm not satisfied with this kind of a thing. But that's what you would have taken your trade if you wanted to take it. And then what happens? Still plays around there. Right. You had zero drawdown, like zero drawdown so far. Okay. Now look at where you are now. Now I can move my stop loss closer maybe. And targeting that low at this point, or even lower than that, depending with your hunger. Right. TP hit. And now what do? I'm now expecting to see a trade here. Neckline. Remember that? Neckline. That's where I'm now expecting to see a trade. All right. Because remember, we have taken out lows while doing all that. We have taken out confirmed lows on our way up. We have taken out confirmed lows on our way up. They never came for me. But I believe when the market opens, they will probably come for me before they can go down. That's my kind of setup. They'll probably come for me in that spot there before they can go down. All right. Because that's where I would love to sell. I don't want to jump onto what I'm seeing now. I would love to sell from there. Let's go to the 4-hour and see what we're talking about. There is our 4-hour right there. And it is still a neckline right there. And not just a neckline. You can tell how price is reacting in that area. You can actually see it for yourself. This what price is doing when it gets to that area. It is not a coincidence, right? It is not a coincidence. And even the weekly peak reset that I showed you about, the long time peak reset, reacted in the same area. So I would love to see price do the same here, right? I would love to see price do the same. Come back up there, react. I take my sell, and then off we go. And target being maybe somewhere there. Because from counting on our thing, we could see that 291 pips was on the 800 EMA. So I would love for us to go as low as the 200, the 800 EMA. But then remember, we've just crossed 5,200. So what do? I wait for the market to come back to the 200. Now that's another important thing that I've just shared there, and then come down. That's another important thing that I've just shared there. And I will kind of repeat it. Right. I'll kind of repeat what I've just said there, because it might help someone. Now, you have, okay, just say you have an M, right? I don't want to say peak formation because people will think this happens only on peak formations. You have an M, right? or whatever, a fee, whatever it is. Then you have the 13 EMA. And then you have the 50 EMA. Every time the 1350 crosses over, right? You buy on the 50. I hope this makes sense. 13 EMA, 50 EMA. 1350 crossover. You have checked everything, levels, everything, whatever. 1350 crossover. Sorry, you sell. 1350 crossover. In this case, you sell on the 50, right? 250 crossover. You sell on the 200. Same applies. 800, 200 crossover. You sell on the 800. So that's your 800. That's your 200. So do you see those opportunities? So that is where your crossovers are. 50, 200. 200, 800. But I am not saying go blindly and just jump into the market. That's not what I'm saying. But I will show you these examples. Every time 1350 crossover, sell at the 50. 5200, sell at the 200. You can actually use this as your only strategy and say, yep, that's all that I'm trading. I count my levels, find my peak formation, do whatnot, neckline, whatever it is. But all I do is I wait for those crossovers and I trade away from the bigger EMA. You can actually use that as your entire strategy. Let me show you examples, right? Let's go to the template. At least there, it will make sense. I feel like today I'm teaching a lot of things and it will confuse you guys. Right.
We are gallant. We are gallant.
I feel like I'm teaching a lot of things. I'm mixing
Stop
things up.
absorbing the body.
And
Absorbing it.
it will confuse you guys. But I want you this week to use this as your strategy, right? 1350 crossover, right? This is the black one is my 13. I changed its color because the red used to annoy me. Black one is my 13. Blue one is my 50, right? They cross over. I wait for the pull to the 50. That's where my entry is. Sell, right? Same applies. I wait for the pull to the 200. Now, let's see if I am lying. All right. Let's see if I am lying. Where else did that happen? We only want areas where we've got a clear move or peak formation or whatever it is. But there it is again. 1350 crossover after a peak formation or an M, pull to the 50, sell from there. All right. Just that. And you don't look at anything else. You only look at that. Here you go. 1350 crossover, pull to the 50, you buy from there. All right. I know this might look fake, but it is what it is. That's all that you do. There it is, another one there. 1350 crossover, pull to the 50, you sell from there. Even if it came back here, it doesn't worry you that much because you know eventually you end up in profit. Look at the gap right there. This would have been nice, you know, waking up to a new week and you are 5 times in profit, you know. There it is again. You also have situations like this where the market will just stay forever, like 1350 crossover there. And I want the crossover, I don't want the crossover to happen immediately like this. No. I mean the touch. I want them to separate a little bit. Then I want to see the market pull back to that. So it means this was your area where you were supposed to enter, right? Again, I'm not saying don't count levels. Count your levels. That's important. Count your levels. I'm just showing you where you can likely find your entry. You can see this one, 1350 crossover there, and it took a while, but eventually it did within that cycle, and you sell from there. Now imagine you are seeing that from a 4-hour time frame, which is it will highly likely happen a lot in the higher time frame. But if you do see it, then you are in good money. All right. If you do see it, because it will not happen all the time. Otherwise, you'll be very rich. All right. Look at that. Look at that. Easy as you just wait for the market to do something like that, and then you are in. You can even use this for volatilities. I'm quite sure it should work on volatilities as well. Let's see on volatilities, right? Let's go to H1. Let's see on volatilities if we have something similar to that. Maybe we can use this as an example too. Where is that M? Right. We can use this as an example. You have the crossover and then you have the 50. The only difference with volatilities is that they will not just touch, they will act like they are passing, you know. They always do that. Look at this one right here. 1350 crossover. Look at that. They will always act like they are passing, but then eventually they will follow that. 1350 crossover, though this one was too close, but I would have taken it from that point maybe. But yeah, not my kind of trade. Again, 1350 crossover right there. And like I said, guys, I'm not saying go and just look at 1350 crossover and say, ah, yeah, that's it. We don't really need to do anything. Look at that 5200 crossover. There you have the setup. All right. I'm not saying just jump into the market for no apparent reason and you know, and just trade. No, not that. The 800 one, it rarely happens, does happen, but it rarely because they rarely cross over. So it does happen, but I don't rely on it too much because they rarely cross over. So it's hard for you to really see it. So the 1350, 5200, you can see it 50% of the time, but the 1350, you are guaranteed that all the time you'll see something like that all the time. You will see it.
Hello, sir. Sorry, sir.
Hello.
Which time frame is best for this 1350 crossover?
I will say H1 and H4 will be good. H1 and H4 will be best if you would ask me because we don't want to stay too much in the market because all you're looking for is that kind of a setup and then you're out. For example, this is Euro USD H1, right? So if you saw the 1350 crossover there and then took it, or when it pulled to the 50, obviously your target is right there, right? That's how that time frame. Those are the two time frames I'll use it on. The reason why I'm not talking about higher time frames is because you will wait forever for it to happen. For example, like here is D1, 1350 crossover. You were only supposed to sell immediately when it touches there. But then for you to wait for this entire thing, you will not see it. So it won't happen as frequent as you would expect. That is why I'm saying H4 and H1 will give you the best chance to see this happening because it will happen pretty much all the time. And you will see maybe more than 10 of these every week. They will always come every single week. All right. So that's how good it is. And you are just targeting the highs when that happens. Yes, if you are counting levels, let's say you're counting levels and then you see this happen on the maybe let's say we're in 4 hour here. You see a peak formation, you see a crossover of the 1530 and then 1850, sorry, and then this pulls out today and you take your buy, right? So what you are targeting first is this high, right? And maybe you've got two positions, you close one, they break the high, they come back there, and now you're just waiting. You're just counting levels now and waiting until you get to your level 3, or maybe your level 3, you would have expected it there. Something like that. That's how you can use it, but then it happens more often on those time frames, as I said. Look at this one right here and that one right there. So that one is just after the reset, 1350, and then the market comes back to that, touches it, you sell, and then off you go all the way up to there. All right. I guess this one is making sense. If you want to back test it, fair enough, go for it. I use it most of the time. Sometimes if you're just looking for lazy pips in the market, you can just go there and just look for setups like that and say, yep, I'm taking such kind of a setup. You don't look at anything else. You just go for it, guys. Look at that one there. This is your USD JPY from the daily time frame. There, right there, 1350 crossover. What happens next? Right there. Sell the pair all the way down. That's all that you do. You sell it all the way down. I don't know if the same happens here, but here you have a mixture because you have 1350, you have 5200. Market never came in between, but then it does come here. So that's another area you can take a buy. All right. Here it never came back. And it does make sense because it is a higher time frame. You do not expect them to come back because it's a higher time frame. Look at this one right here, 1350 crossover. The market came back right there. So you could have taken a buy. Man, targeting daily time frame here, those are huge pips. Those are huge pips. You've been very good money here. They never came back. And don't all right, let me explain this. Don't look for setups where you have a 1350 cross, then you don't have a touch, and then the market is far away, and then it comes back, and then you say, yeah, that's it. He's told me to sell there. Like, that's too far away. You look for a reasonable distance, like a reasonable distance between the crossover and the what? And the touch. So you need a reasonable distance there. So yeah, that's it. I actually wanted to create an indicator that will spot this kind of a setup in the market. I did actually create it, but it had some problems. So I was kind of like, I will leave it. I'll let it be. But I wanted to
Respect for
create
my
it.
boss.
So
Ciao.
I need someone who
My
is
bro.
I need to look for someone who is good in programming, so who can better than me because I'm a novice. So I need someone who's good in programming who can make an indicator like this one. I can tell you to make one. So look at this USD MXN that we were analyzing. What do you see? 1350 cross. So what do you expect? Remember, we said we expect our setup here. Where is the 50 EMA? Right there. There is your 50 EMA. So you already know because I said on the 1 hour that we only have two levels, right? On the 1 hour, we only have two levels, which is this one level, and then second level. So now you already know we will buy to the third level. You know that's what's going to happen because there is no way he will come to the he will cross over the 1350 and then not touch. And now imagine you are on a D1. Just you imagine you see this setup. Market touches the fifth and then your target is here. Imagine what could happen or what will happen. Just imagine your target is right there. Not even on the 200 EMA, but just right there. And your entry is right here. But I can guarantee you, no one will catch this one. Or maybe I'm the only one. You'll see. You will miss the trade. Or maybe you are starting to put alerts now that when it gets to 20, 32,000, it should tell you. But that's how easy it is, guys. 1350 across, first touch on the 50, sell the pair, sell it hard. And you see how it's gonna it's gonna turn up for you. All right. Yeah, this one is another example, good example. This is the weekly time frame though. So weekly time frame, again, these are very good pips. You've got your 1350 crossover there. You've got your pull to the 50 there, right? Look at what happened after that. This is where the market ended up after that. That's how, I can't say easy, because if I say easy, people will kill me here. They'll be like, man, that is not possible. I can't say easy, all right? 5200 crossover, and then there is your setup right there. 5200 crossover, there is the first pull to the 200, and you're gone. Guys, I think I have said a lot of things in here, and I do not want to confuse you, all right? I do not want to confuse you, and there, definitely I'll send the link to the recording. Please watch this. Please back test this. If you want to make this your strategy, look for it during the start of the week. And I will say this 1,000 times. Do not trade every day. Do not trade every day. And when you win on a certain particular trade, take a day off the next day. Relax, breathe in, breathe out, forget about the market, and come back the following day. What makes people lose in the market is over trading. I can guarantee you that. You win the first trade, you lose the next 3, you get frustrated, and you end up losing the next 6. So you will not win all your trades, but if you win or lose, take a break, come back for the next one, etc., 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 doing that. Someone is saying, does this work on 15 minutes? Man, I'm telling you, if it works on D1, 15 minutes is peanuts, all right? If it works on D1, 15 minutes is peanuts. 5200 crossover, the first touch, buy, right? So if it works on the D1, then definitely on the 15 minutes, it will work. You just need to look. 1350, pull to the 50, you sell, right? It's only that trading view makes my candles look ugly, you know, when they are too close to each other. But that's what you'll be looking at. This is a short buy as well. Like, I'm not saying look for every 1350 crossover, right? Look for 1350 crossover where you know this is the start of the cycle. The reason why you are using this, you are avoiding trading peak formations, because peak formations and level 3s, they will definitely hit you. So you want to try and avoid them, right? So by avoiding them, you wait for the market to form whatever that peak is, or it's a reset, it's a peak, it's a high of the day, low of the day, whatever it is. And then you wait for the 1350 crossover, then you take it right there. Now, a good thing about this one, you also have the 5200 in place, right? Or if you zoom carefully, you can tell that the 50 setup probably happened here. If you zoom carefully. I know that's hard to see, but yeah, if you zoom carefully, it happened there. But nonetheless, 5200 crossed over, and that is where you could have taken your entry. Now, this is how far it went down.
That means, coach, we'll be counting our level perfectly before we could take of this one.
Yeah, yeah, count.
Leg will bite out though.
100%. Count your level. Now, look at this one. USD CHF. There. There. That's H1, right? There. So on Friday, you could have just taken a buy there and up you go. You make a few pips before the market closes. That's what you could have done. So count your levels. Don't just go in blindly because it will hammer you, right? The market will hit you. So count your levels, look at it, and take the trade when you're sure. Now this one, because I did trade this whole buy, so you can tell you've got 1350 crossover there. So when all this happened, I wasn't scared because I knew it was a buy. So I didn't even worry about it because my position, I remember I asked you guys to sell this. I sent you a setup for this and it was still sitting down there. And I wasn't worried at all because
We
I
analyze
knew,
it in the upper week.
ah,
We analyze it upper week.
yes, I did give you this one. I know it very well. And I even told you when just before it lift off, and I said, here it is. And after this happened, not worried. Again, 5200 crossover. Your setup happens right there. All right. So that's what you're looking at, guys. And you keep on going up. And I will say this one last time, right? Count your levels. Count your levels. Make sure your levels are okay. Make sure everything is like matches what you are looking at before you can decide to just jump in and say, yep, he told me 1350 crossover, so I'll just buy. Find that peak formation, find it, find that peak formation, find that reversal area, find that reset, find that neckline area, whatever it is, just find it. And then when you see it, the next thing, look for the crossover. Then the next thing, look for the touch. When you get to the 50 EM, it will give you a setup there. Sometimes it will touch so many variations, right? And look for those kind of things. And then it's more like trading, ID50. But the difference with this one is that you're waiting for the crossover. That's the only difference. It's just like trading ID50. But here you're waiting for the crossover to happen first, as opposed to an ID50 where you can have it even before the crossover, right? But this one, you want to see the crossover happen first, then you can take the trade. So all these are opportunities that you could have taken while the market was going down. All right. I guess this is it, guys. I know there's one question I didn't answer, and question that was asked by Ricky. I know I didn't answer that one. I will try and make a separate video for it because I feel that one will be a little bit too long. So I'll make a video for it and then I will send you, or either way, we can do it over the weekend. I'll also see maybe during the week if we can have a chance for a short Zoom. We'll see what happens. But I might have some time during the week to have a quick short Zoom, and then we can. All right. Thank you very much, guys, for listening to me. Please enjoy your evening. If you've got any questions, please ask in the chats page.